We are live, so welcome back to Dapp University. So today we got lots to talk about in our live stream. We're going to look at Ethereum, or Ether, the asset that powers the world-famous leading blockchain smart contract platform, Ethereum, okay? And talk about the upcoming event, the merge, and whether the price of Ether is priced in already ahead of the merge, and if this could crash after the merge for several reasons that we're talking about potentially in this video. So we'll look at that. We're going to look at a lot of other updates that have happened in the space since yesterday. Again, we do these live streams Monday through Friday on this channel. Just subscribe, turn on notifications. You're going to find out about those whenever we go live. We're going to, of course, take a quick look at the crypto markets, answer some of your questions, and a whole lot more. So if you're new around here, hey, I'm Gregory. And on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to become a blockchain master, step-by-step, start to finish, land your first blockchain job, I can show you how to do that over at dappuniversity.com/bootcamp. So we got people jumping in the chat here. We've got David Stone, Cody, Jaya, or Jaya, I hope I'm saying that right, Venture Warrior, CJ, Automatic Beats, Brent, T-Share, Mark, Kitty, World War Zero, let's see, Giannis, Ozzy, Cryptechnology. Welcome, welcome, welcome. All right, so let's jump into this. Let's talk about the Ethereum merge that's coming up and what could happen to the price of Ether ahead of that and also after. Like, could we see a crash causing the price of Ether to completely dump after that? So I'm going to go ahead and jump into this first item here. Where we saw this comment this morning, basically an anomalous Ether futures pricing condition is likely to revert after the merge. So the current state of backwardation reflects the general view that ETH will fall following the merge, but this could be short-lived, one observer said. So let's jump into this. So basically, you've got the Ethereum merge coming up next month, all right? We're less than a month away. Let's set a stage for this. Let's actually get an official countdown here, days until September 15th. That's when the scheduled date for the merge is, roughly speaking. Okay, that's just 22 days away from the time we do this live stream. All right. So again, September 15th is an estimate. Okay, we do this based on the total terminal difficulty in the blockchain, which is just how hard it is to produce blocks with mining. At that point, boom, the miners can't mine the chain anymore. The chain merges into the Ethereum merge. Hence the merge. We have two blockchains running. Boom, they become one. Proof of stake is turned on, and now Ethereum is merged. So that's gonna happen in 22 days, and we've seen, the Ethereum price climb significantly over the past, 45 days or so, with a recent correction, which we'll take a look at here in a minute. Begs the question: is the merge priced in? Can we see further price appreciation, and what's going to happen after? So, like I said before, right here, we're seeing the futures market, which is basically people betting on the future price of Ether, the asset itself, not the current price or the spot price. If you're going to go buy Ether on exchange, that's what that price is, versus the futures price. People are able to bet on contracts, derivatives contracts, on what they think the price of ETH is going to be in the future. And it slipped into backwardization and abnormal condition in which futures trade below spot prices. All right, where basically indicating the expectation that the cryptocurrency will weaken in the coming months, particularly after the Ethereum merge that's going to happen next month. So if this does happen, people are thinking the condition could be short-lived. Okay, futures probably flip back into trading at a premium. The situation basically after the upgrade. So what could this potentially signal? Well, I've been talking for months on this channel that we could see a potential buy the rumor, sell the fact situation with the merge, where you could basically see people try to accumulate Ether ahead of the Ethereum merge and then essentially selling it right before or right after, okay, or at the time of, okay. So why people do this? Again, people try to hit the merge trade like crazy. They know it's one of the most significant events in the entire blockchain's history, and also just the crypto space's history, since Ethereum went live in 2015. Okay. And, there's always going to be hype around this type of thing for the expectations, and those expectations get inflated. And that's kind of what happens in crypto is you get hype and expectations around one thing that creates a narrative. You can accumulate crypto ahead of that, and then boom, basically try to sell it before it hits the market. Now, I think a lot of people that actually are going to try to sell Ether based on some specific fears. Okay. Basically talking about the risk of the merge not going successfully, and also the risk of new Ether hitting the market after the merge happens. So basically everybody who has staking Ether right now has gone and put it on this separate blockchain, okay, the beacon chain right now. And withdrawals for that staked Ether are not going to be enabled till after the merge. Now, here's the thing most people don't understand is that there's a big delay on that, okay? It's going to be months after the Ethereum merge takes place before withdrawals are going to be enabled. Okay. And so all that staked ETH is going to be locked up for some time and would essentially not hit the market to a way that would cause that type of sell pressure that I think a lot of people are scared of after the Ethereum merge that would contribute to sort of this buying the rumor, selling the fact, or selling the news sort of situation. Okay, so that's one overlooked aspect of the Ethereum merge is everybody who's locked up right now still won't be able to withdraw initially after the merge. There's going to be a post-merge cleanup period where they enact these types of things before it actually takes place. Okay. So one important thing to understand is talking about, could the price of Ethereum crash after the merge with people selling based upon these fears of ETH hitting the market, or simply doing an ETH trade and watching this dump, whether it's for a temporary amount of time or for a longer price correction. My whole thesis on the merge, as we'll see corroborated by another opinion here in a minute, is the long-term price impact is going to be a very good thing for the blockchain itself. Because, of course, what happens with the merge is it changes the economics of how Ether, the underlying asset behind the blockchain, actually works. Okay, the blockchain right now and after the merge creates new cryptocurrency every blocks or mines. So if I send a transaction from one account to another, I pay a gas fee to do that. And then a miner right now on Ethereum includes that into a block. They're paid by the blockchain itself. They're also paid by my transaction fees. Okay, and so after the merge, the amount of cryptocurrency that's created by the blockchain is going to get reduced significantly. It's called a triple halving. That's the thing that's coming up. Everybody's talking about it's like Bitcoin's halving, but 3 times all in one go. So it reduces the issuance like crazy. And also we have fee burning on Ethereum, which can offset the ETH issuance created by the blockchain to make ETH deflationary at times of peak network activity. And as long as it stays the same as it has been over the past back looking year or so, and continues to grow over time, or at least stays the same as that 1 year period, then on larger time frames, ETH will become deflationary, which means there's going to be less ETH on the market every single year. Okay. Which, if you're talking about basic supply and demand economics, assuming that the demand for Ether assets stays the same, which I expect it to grow over time, that will have an impact on the price. So if we do see some type of short-term dump based upon what happens after the merge, based on the futures data that we're seeing here, then, in my opinion, that's a short-term type of situation, whereas long-term, I expect the merge to be a very, very good thing for the Ethereum price in terms of appreciation. Now, let's look at some other reasons why we could see, more and more people pile into ETH. All right, looking at another piece here, talking about, is the Ethereum merge priced in? Let's just make sure my YouTube stream didn't go away. Can y'all still hear me okay? Let me know if you can still hear me okay. I think my streaming software just hiccuped for a second. Okay, awesome. We're still good. So another opinion here talking about the Ethereum merge, is it priced in? Okay, so let's hop back into this. Sorry, I lost my train of thought because my streaming software hiccuped, and I just want to make sure y'all can still hear me okay. Anyways, so more reasons why people want to hold Ether, of course, have to do with the staking yield rewards on this. Okay, we're seeing Ethereum stake rates surge by 11%. The title's a little misleading. It's not talking about the actual returns. It's talking about the amount of people jumping into the ETH 2.0 staking contract. We saw 11% increase in the number of deposits in a very short time frame. Okay. Also, yeah. So, anyways, we're seeing a greater increase in the number of people who are piling into the staking, basically staking on ETH 2.0, or people don't like it when I call it ETH 2.0, but a lot of people still think of it as ETH 2.0 ahead of the merge. So, talking about this, is Ethereum merge priced in? So, talking about this opinion is that Ether is woefully underpriced, and of course, the catalyst they're talking about in the corner that could affect this is the Ethereum merge. I talk about a lot of the same reasons that I do here, essentially, which is undercounting the number of people who are moving into ETH for staking purposes. Okay, and I talk about this a lot on my channel. How when ETH becomes a proof of stake asset, we can take cryptocurrency, lock up to blockchain, and get staking rewards on that. that's going to be a really attractive asset for bigger players in the space, especially larger institutional players, because you can get, it becomes a yield-bearing asset. It's very blue chip. It's a blockchain with a very strong history, a very bright future ahead of it, okay? Because, Ethereum really has the momentum for becoming the leader in the space as a global settlement layer for, blockchain-based finance or DeFi. Okay, of course, there's other competitors in the space, but in terms of its reputation, it has a really, really strong head start. Okay, so if you have that asset, okay, that is actual staking asset. Of course, you can stake other assets. You can stake DeFi tokens. You can stake all this other stuff, other blockchains, but none of them have quite the same, this is the same status as ETH, the asset itself, especially when we're talking about all the issues we've seen with other blockchain solutions like bridges, censorship on given apps, all that type of stuff. Stablecoins could potentially get blacklisted. We're talking about a programmable asset like ETH that's just native to the chain. It has no other failure points on top of it with applications and bridges, all that type of stuff. And you can stake this asset and earn yield, and it's been around for a very long time. Like, that's a huge deal, okay? And, you be perfectly honest, like, most people aren't piling into ETH for the interest, right? Like, the yield. They are, but it's not the only reason. Like, if, let's just say ETH was a stable coin, it wouldn't be that attractive as a blockchain asset for it to just be like a blockchain, a staking coin that's pegged to the US dollar that gives you like, 4 to, I'll say on the absolute maximum high side, 15% interest, right? Now, I realize it will always be that, and there's no guarantee that it'll be that, but if you add on things like transaction fees and MEV boost, like at peak activity, maybe you can get that, right? Or depending on how many people stake, let's say less people stake, et cetera, et cetera. So let's just say ETH was a stable coin that had no price appreciation. It wouldn't be nowhere near as attractive as an asset that is so blue chip, that has strong potential for price appreciation on the principal asset itself, plus the staking yield that it happens over time. And so that's the big reason why I can see lots of people continue to pile into ETH. And so that's part of the opinion of the ETH merge not being priced in here. Okay. And then also, citing the reason that ETH, from a financial standpoint, the net issuance of Ether supply is going to be net negative. Okay, talking about hope becoming a deflationary asset, making it more valuable to hold over time, combined with the fee burning here of EIP 1559, as I mentioned before. I don't think I mentioned the proposal name. The EIP 1559 is what went live. I believe it was last August, a little over a year ago. And that's how we're burning ETH whenever new transactions are created. So basically, if I send cryptocurrency from my account to yours, all right, I sign that in my MetaMask wallet, I pay a fee to do that, all right, and that fee gets split up into two parts, the base fee and then the miner tip. The base fee, the first part of that, gets burnt, it gets erased from the network, and then the miner tip, of course, goes to the miners. And so when you have all those when you have people using the network more, those base fees grow in size, the things that get burned, okay, and those actually can offset the issuance of Ether. I pull up this resource a lot on my streams, but you can visualize that ultrasound money. Okay, like if you look at the Ethereum issuance. All right, and you look at you put in the all-time frame. This says EIP 1559 went live, and you look at the amount of ETH here on the left. This is the amount of ETH issued. Sorry, over here on the right is amount of ETH issued per year. Currently, 5.5 million ETH per year, and then $2.5 million of ETH is getting burnt every year. All right, that's 2.5% inflation. But if you simulate the merge and the net issuance reduction on the all time frame, that's negative 1.5%. So assuming we can average that out over time, which it goes up and down, like if you play around with the settings, like some periods are not quite deflationary right now. Some are. But over long time frames, like it's likely going to be that. So that's another reason that's citing in the article here. So another reason that they talk about is, and this is another people don't bring up enough, is what happens to the circulating supply based upon staking. If you make ETH so attractive to stake, that means less ETH is hitting the market to sell. I know. So going back to this, people are talking about the ETH hitting the market that's going to be locked up in the beacon chain, sort of buy the rumor, sell the fact situation. worried about a crash, worried about essentially all the people that are on the beacon chain that have been locked up. They're just going to yank their ETH and they're just going to sell it instantly, right? So the begs the question, is it going to be the principal they sell, or is it just going to be the staking rewards? And I think people are still worried about the staking rewards, getting dumped onto the marketplace. But you have to understand is that the staking rewards themselves, it's a different thing than miners currently that are selling ETH on the open market, adding sell pressure to ETH, the asset itself, on a day-to-day basis, because this changes the dynamics of the cryptocurrency quite a bit. Because right now, let's just say, like, okay, if you're a miner, you're mining crypto on Ethereum network, right? You have energy costs, you have machine costs, okay, hardware costs, I should say, and you have to pay for those. So whenever you get your mining rewards, what are you going to do? You're going to instantly sell it, okay? Now, you might hold some of the Ether for long-term price appreciation, but you still have certain costs that you have to cover. And you're likely going to sell. Now, again, some people will just bet on the price going up, especially in a bull market, and they'll pay cash maybe to eat some of those costs. But for the most part, like, the incentives are going to be to sell the ETH that you're getting to pay for what you're doing, right? So with staking, the dynamic changes quite a bit because the machine costs are negligible compared to the staking rewards. Now, they're not zero, right? If you're going to run the hardware required to staking, it's not like free, but it can be relatively cheap on the grand scheme of things, okay? And you actually have to hold Ether in order to stake it, right? So you have to hold, 32 Ether to actually run a validator. And of course, there's going to be staking pools where you can stake with less. But the whole idea is you're going to have skin in the game, right? And so think about it this way. Let's say let's just for easy numbers, let's say it gives you 10% staking rewards. Now, natively, it's probably not going to do that, right, anytime soon, based on the number of people staking. And maybe we get lucky and we get that with like ME boost and transaction fees, okay? But let's just say we got 10% for easy numbers. If you held 32 ETH, that means you're getting 3.2 Ether on an annualized basis. That means there's still a 9 times ratio of ETH that's getting locked up that's not going to be sold versus the amount of ETH. So let's just assume that everybody who gets their Ether stake instantly dumps it on the marketplace. Okay, it's still going to take 9 times that amount of Ether not being sold. Like, I'm just assuming a situation where everybody who's staking is locking up their Ether, and then they're not going to sell their principal, and they're only going to sell their staking rewards, and they are going to sell their staking rewards every time they get them instantly, right? That basically means you're going to have, there's still going to be a 9 times ratio of the amount of ETH that's getting parked and is not moving versus the amount of, new ETH is getting held and, getting received and dumped. And that's going to be a much smaller number compared to mining, okay? Because also with mining, like right now, let's assume that every single miner did what I was talking about before and instantly got their Ether and instantly sold it on the open market that day, right? Okay, so let's say the primary means of getting that Ether is from block subsidies or new Ether created, okay? And then remember, like, let's just say that pre-merge on an annualized basis, that's, let's just look here, on a 1-year time frame. I don't think I can do a 1-year time frame. Let's just do a 30-day time frame, try to multiply by 12. Based on a 1-year time frame, it's 5.5 million ETH per year. Okay, the merge is only going to do 0.6 million ETH per year. That's a 90% reduction. And so in that case where all the miners sold every single day, let's just say that you still had that, and let's say all the new ETH that hit the blockchain every single day is sold under proof of work. Well, if the thing that I was talking about before, all the staked ETH, all the staking rewards were to hit the market every single day, is 90% less ETH hitting the market every single day. Now, reality is not going to be the same, that exact model, right? Reality is going to be somewhere in the middle. There's going to be some people who decide to take their principal out of their Ether validator that day and then sell everything, right? There's going to be miners in the real world scenario now who never sell anything and are banking on long-term price appreciation, right? There's always like somewhere in the middle. But if you assume a very simple model like the extremes, the sell pressure is going to reduce drastically, especially compared to the amount of ether that you have to lock up and park. That's never going to get sold because it's being productively used to validate blocks on the network. The dynamic really changes quite a bit. So that's another reason why long term I'm so bullish on the ether price after the merge, is because there's so many economic factors that point toward that, especially when you're talking about a blockchain that's gaining meaningful adoption over time, and particularly around the L2 space. Now, I want to talk about something in here that, I think a lot of people miss. Which is basically the network activity on Ethereum is getting harder to track. Okay, like if you look at the amount of daily active transactions and active users and stuff like that, we've been on a little bit of a downtrend, okay, since the beginning of 2021. Now it's reasonably flat, okay. It's kind of flat, over the past since really like, summer of 2020, since DeFi summer really kicked off, okay, with a slight bullish and bearish trend that kind of mirrors the crypto markets, okay. But we're not even talking about a 2x range like here, right? Like there's a pattern, but mostly you could kind of just draw a straight line through this. Now, a lot of people think that means that Ethereum's not meaningfully, gaining traction, but you have to take into account what's happening with layer 2 scaling solutions, right? You actually have to look at the amount of transactions per day and active users on those ecosystems, because a lot of people are wondering whether, the merge and Ethereum 2.0 is going to fix Ethereum's gas fee problem. It's going to make Ethereum faster. I still seeing like major news outlets and like major influencers talk about they're so excited about the merge because it's finally going to fix ETH gas fee problems. And it's like, bro, that's not going to happen. But anyways, like that's what layer 2 scaling solutions are for. That's the bad news, is the merge is not going to fix that problem. The good news is the solution's like here now, and it's getting better over time, which are layer 2 scaling solutions where you create the second environment where you do those transactions and then you can settle those and piggyback off the main Ethereum chain. So one thing I want to point to essentially is what's going on with Optimism. Okay, so Optimism is one of the leading Ethereum scaling solutions, okay, with optimistic rollups technology. And I want to go over some stats about what's happening in the Optimism ecosystem. Of course, they did a massive airdrop, which I talked about on this channel before it happened. And then, anybody who followed along with those tutorials likely got some free money just for watching these videos. So anyways, they launched the Optimism token, distributed grants to projects to grow the Optimism ecosystem. I want to track some of the growth that's happening right here. So basically, since 12 of 43 Season 1 incentive programs launched, Optimism averaged 150,000 transactions per day, okay, up 43% versus prior 90 days. If like you compare that to the Ethereum daily transactions chart, okay, so at our peak, right, we were at like 1.5 million transactions per day, basically. But if you draw an average through here, let's say you're averaging about 1 million transactions per day. And you can see, like, let's look at this right here. This is 1.3 million transactions per day. This is sort of like maybe a median number in here is maybe like 1.2. And then a low point would be like just under 1 million, right? So a difference of maybe 200,000 transactions per day. Well, guess what? You got 150,000 transactions per day in that difference up here in Optimism. Okay, so clearly a lot of this activity has moved up to layer 2s themselves. Now, I know that some of those transactions will be basically kind of factored in with the rollups getting settled on Ethereum, but the whole idea of the optimistic rollup is you get batches. Okay, so there's a lot more, there's going to be way more transactions in these Optimism roll-ups compared to the ones that are getting settled on the chain. So I know there's some double counting here, but it's by huge factor that you'd see this block, this batch of 150 move up there. That's up 43% over the last 90 days. Basically, remaining 31 approved projects have yet to launch their Season 1 incentives. Okay. We see big potential for Optimism builders. Okay. So everybody's trying to build their project. Looks like we got some good feedback here. Let's see if I can find these charts here. This was up to 196,000 transactions per day on this daily average. 420 million in Aave available liquidity. Let me just pull up this other tweet here. Sorry, I missed another tweet. Anyways, the whole point here is we're seeing some pretty significant adoption in these ecosystems, okay? And if you look at the growth in the Optimism ecosystem plus what's happening in the Arbitrum ecosystem, also we got Arbitrum Nitro launching in just a matter of days, and you combine that data together, you get a pretty significant number of active users on the entire Ethereum ecosystem once you start adding in the layer 2s, okay? So that's pretty significant. Another one to definitely watch out for is the ZK Sync 2.0 mainnet, which will have the ZK EVM, where we can take Ethereum smart contracts and put them onto ZK Sync. It's going to be a pretty big deal, in my opinion. Okay, that's going to be shortly after the Ethereum merge, so definitely check out that. So, with a combination of Ethereum doing what it's doing, going through the merge, layer 2 scaling solutions making Ethereum faster and cheaper to use, more ETH becoming staked onto the network, to earn that passive income reward, less ETH hitting the market. All of that is really, really good for the ecosystem and the price of Ether, in my opinion, over the long term. Of course, not financial advice, not telling you to buy any Ether based on this information. We, of course, could see some volatility surrounding the merge as a buy the rumor, sell the fact situation, as per the futures data here, people betting on Ethereum dumping after the merge, okay? But in my opinion, that would also be a short-term movement based on the fundamentals that we see over the long term. Now, of course, crypto does not exist in isolation. We still have to get clarity about what's going on with the macro economy. We've got the Jackson Hole speech this Friday. Definitely check out that. But that's sort of my outlook on the short to medium term. Someone says not all miners will dump their ETH. I'm holding a few myself. I think the merge will cause a nice pop. Yeah, as I said before, I didn't say all miners would sell their ETH, right? That's not what I was trying to say. What I'm saying is the incentive is, if you're staking versus mining, the incentive for miners is going to be to sell some of that ETH. Like I said before, in an extreme example, that's everybody would sell. But realistically, you're going to have miners who might even, on the riskier side, wouldn't sell any of their ETH, right? They would hold everything because they're betting on future price appreciation. And let's say they had an income source to cover their mining costs, they might just do that. And that's the better bet for them, because then they could receive it and then hold it, maybe get, the long-term price appreciation for that type of thing. Yeah, because that's the opinion. It would not be advantageous for miners to sell their ETH if they believed they were mining. The electrical costs are low compared to profit margins coming in. Yeah, so that's what I'm saying. It's basically, there will be miners who think that way, right? But there, of course, will be miners who have the reality of they don't have another income source to pay for their mining operation, okay? So those miners definitely will require, to sell in order to do that. Somebody says if people start selling, the yield would go back up, incentivize people to stake back again. So that's if people start unstaking from the network. Okay, so there is an inverse relationship with the number of people staking versus the yield. So basically, the fewer people stake on the network, the yield goes up. So, if basically at the minimum threshold for staking, I think the yield is 20% or something like that. It's 25% maybe. So what that does is it's hey, people go, oh, I want 25% of my ETH, and they start staking. But then people rush into that. It's the incentive mechanism, and then that yield goes down. Works kind of like a bond in that way. But the incentive mechanism is to help secure the network. That's what it's for. If people stop staking, they need people to take the network, so their yield goes up. Somebody says, I've been hearing of a chance of a proof of work hard fork that allow miners to continue validating transactions on their own chain. So Yeah, we're still seeing more and more of a push for Ethereum proof of work. Okay. Um, Basically, this is the idea of the chain forking and then people staying behind and mining, keeping a mining version of Ethereum, a proof of work version of Ethereum. We're already seeing the coin for this, like, trade with IOUs on certain exchanges, but the price is like dumped hard. Okay. All right, everybody, that's what I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That'll help these videos out so the more people learn about blockchain. And, if you're as fast in this technology as I am, you want to get your hands dirty, how can you get started today? You can go to my YouTube homepage. You can find those free courses there. They're like Udemy courses, but they're totally free. If you like those, you want to take the next step, you want to change your career, become a real-world blockchain developer, I can show you how to do that over at dappuniversity.com/bootcamp. You pick expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time.